team from Tattvam Advisors. Today, I would like to introduce, first of all, Tattvam Advisors, which is a one-year-old firm, but don't judge them by their age, because they are a team of 50 members and they're handling various big clients, the Fortune clients, entire India. They have a presence in Delhi, NCR, Mumbai, and Bangalore. And today we have Tushar Aggarwal ji with us from Delhi, and CA Hanish ji from Bangalore. So I would like to start with the introduction of Tushar ji. CA Tushar Aggarwal ji is a founder partner of Tattvam Advisors, and he leads the litigation practice. He has more than 10 years of experience in indirect taxes. He has worked for more than 8 years in Lakshmi Kumar and Sridhar attorneys. He was also deployed by GSTIN for GST implementation and has worked closely with the government officials. He has worked extensively with the government of India in the designing of GST returns, audit, and other formats. So, first of all, welcome Tusharji again to our platform. I am very glad to have you.
Thank you so much. Sure.
From the south, we have Hanish ji, who again is a part of Tattvam Advisors and is working in Bangalore for Tattvam. Hanish SG is a partner at Tattvam, heading the Bangalore branch. Hanish ji again has more than 10 years of post-qualification experience in indirect taxes. He is a regular speaker in various forums across India and has addressed many students of ICI, ICSI, ICWI, as well as various trade bodies like FKCCI and BCIC. He is also a regular speaker for training programs organized by revenue authorities for their officers. Welcome, Hanish ji, again to our platform. I remember that you did a great session on e-way bill last year in August, and I think we'll enjoy it as much as we did last time. So over to you, Tushar ji and Hanish ji, for your session.
Thank you so much for your kind words. Just give me a couple of seconds to share the screen.
Also, Rajendra Arora sir has also joined our meeting, so I'll just add him.
Is my screen visible?
Yes, sir. Yes, sir.
Full
Sir,
screen mode.
just before starting, I would like to check. Rajendra sir, can you unmute yourself?
Yeah, sure. Yeah.
Yeah, sir. You're audible, and we were just giving all the speakers, and we are glad to have you as well, sir.
Thank you for the opportunity. Thank you.
Tushar sir, I think we can begin. The screen is clearly visible.
Okay, thank you so much. At the outset, I would like to thank AFTP and Webtel for this opportunity. Friends, in today's session, we will be deliberating upon the major High Court jurisprudence which have come in 2020. We will also discuss some of the issues wherein writ has been filed and the same is pending before the High Court and the outlook for 2021. Though we have made our slides very extensive and covered lots of judgments, but given the time frame, we will be touching upon 10 major topics in today's webinar. To start with our first topic, judgment of Honorable High Court in the case of Cosmo Films Limited in the context of Rule 9610. It's a very landmark, very major judgment which has resulted into thousands of DRI notices being issued over the last couple of months across India and is one of the most talked about judgments. Just to give a brief background about the judgment. To understand this issue, let's firstly understand the brief history and the brief relevant provisions. In 2018, government had introduced a restriction for exporters. The restriction was that if an importer is importing goods under advance authorization and was claiming IGST exemption benefit, that is, when he import goods, he is not paying IGST, he is claiming exemption under advance authorization license, then in such a case, if that taxpayer is exporting goods and then on export of goods, he is exporting goods after payment of duty, he will not be entitled to refund. I repeat, If an exporter who export on payment of duty will not be entitled to refund of the output duty in case where his inputs are imported under advance authorization without payment of IGST. This is for the reason that these taxpayers were importing inputs without duty, then utilizing the accumulated credit for payment of output duty on export, and then claiming that refund. To curb that, they had introduced this restriction in September 2018, and they made it retrospective with effect from 23rd October 2017. Thereafter, there was lots of hue and cry, and finally, in October 2018, they came out with new notifications, 53 by 2018 and 54 by 2018, along with circular. And in the circular, they clarified, specifically clarified, that this restriction will be prospective. So that circular specifically said that this restriction of not granting the refund in case of import under advance authorization, it will be prospective only and not retrospective. So after the issuance of circular, it was very clear that for the period prior to 9 October 2018, I could have imported under advance authorization, simultaneously exported on payment of duty and claimed refund. However, for the period post 9/10/2018, I could not avail both the benefits. However, even for the post period, the one of the taxpayer, Cosmo Films Limited, went to Gujarat High Court and said that this restriction is ultra virus. So they challenged the virus of this restriction, which was imposed for the period after 9 October 2018. The High Court dismissed the writ petition. They said that it is very much in consonance with law. And in addition to that, they said that it will be made applicable with effect from 23rd October 2017. So even though there was no question put forward to the court whether it was retrospective or prospective, in the judgment, it was specifically said that it will be made applicable with effect from 23rd October 2017. And pursuant to this judgment, now we are receiving hundreds of DRI notices, all exporters are receiving, and the DRI is saying that after 23rd October 2017, you are not eligible to claim IGST exemption benefit because of this restriction. In our view, since there was a specific circular which stated that all this restriction will be prospective and the intention of government is to make this prospective, in our view, this judgment may get reversed at higher forum. In fact, we have another judgment of Javeri and Company, which has been filed before Gujarat High Court, and the same is pending. So, in our humble submission, for the period prior to 9 October 2018, it's a very good case for the taxpayers. Since relying upon circular, they can contend that they are not liable to respond to that DRI notices. They are not liable to pay IGST. Similarly, they are not also liable to refund the exporter GST amount which they have claimed from the department for the period before 9 October 2018. However, for the period after 9 October 2018, the issue has to be handled, and we will see how Supreme Court ultimately respond in all these cases. Moving on to our second topic related to anti-profiteering. Friends, as per Section 171 of the CGST Act, any reduction in rate of tax on any supply of goods or services or benefit of input tax credit has to be passed on to the recipient by way of commensurate reduction in prices. So it includes two things. First is if there is a reduction of output rate of tax. Say I'm selling an MRP based product of 100 rupees. Rate of tax is 28%. Now, if the rate of tax gets reduced to 18%, I'm liable to pass on that benefit by way of reduction in my prices. That's the first clause. Second clause is benefit of input tax credit I have to pass on. So this is in regard to the transitional contracts which I had entered at the time of GST implementation. Suppose I had got a works contract in 2016 from a customer worth say 10 crore rupees. So at that time, I had quoted this tax 10 crore rupees based on my costing and based on the credit eligibility at that time. Now, after 1/7/2017, since my credit was open and I was eligible to take the benefit of various kinds of credit, and I, as a taxpayer, was liable under Section 171 to pass on this extra input tax benefit which accrue to the taxpayer. So this provision is contained in Section 171, and then we have Rule 122 to 127, which deals with various provisions related to anti-profiteering. Now, we have witnessed in last year that more than hundreds of orders have been issued by DGP and NAPA more particularly in real estate sector, FMCG sector, hospitality sector, and most of these orders are against the taxpayers. And presently, almost more than 40 writs are pending before Delhi High Court. In fact, the next hearing will be on 15th of November. So we'll just discuss the grounds basis which these petitions are pending before High Court and the judgments which we look forward in 2021. The first major ground is the reason of which is pending before High Court is the excess delegation of power. So what is there is that there is no prescribed methodology in the section. The section clearly does not speak about the method to be followed for calculation of anti-profiteering. Under the rules, it is only the NAPA who frames its own method for calculating the anti-profiteering. The section does not give any guidelines. So practically what is happening is that in various sectors, NAPA has come out with some method which is not very logical and giving absurd result. For example, in real estate sector, what they are doing, they are comparing pre-GST ratio with post-GST ratio. And what is the ratio? ITC upon turnover. What they do for a pre-GST period, they take total input tax credit upon total turnover, calculate a percentage. For post-GST period, they do input upon turnover, calculate a percentage. And the difference of that percentage is the anti-profiteering. And this kind of method is giving a totally absurd result in many of the cases. Secondly, there is no fixed period. Sometimes they for post-GST period, they take from July 2017 till March 2018. Sometimes they'll take till March 2019. So there is no fixed investigation period. And with every change in period, the anti-profiteering percentage changes, again leading to absurd result. Third, they are even asking post GST customer to pass on the benefit. For example, if I'm entering into a sales contract in 2020, it's a new contract, enter now. There also they are expecting the taxpayer to pass on the benefit. This is the NAPA order. NAPA is saying that even if you have entered the agreement in 2020, still anti-profiteering applicable until and unless you have specifically mentioned in the agreement that prices are calculated after considering section 171. Fourth, there is no clarity whether benefit has to be given at customer level or entity level. Say I'm selling a chocolate of rupees 10. Now there is a benefit of 20 paisa. I cannot reduce my MRP to 9.80 paisa. Ultimately, I pass on all these benefit at entity level to other customers, which NAPA is not agreeing. So these are the basic grounds basis which the rate is pending before High Court. Then there are other technical grounds like absence of judicial member in NAPA, quorum of members, etc. So we are eagerly waiting in 2021 for some reasonable and good judgment to come in favor of taxpayers. Moving on to input tax credit. The first major issue is with regard to the writs which are pending in respect of Rule 86A, which deals with blocking of credit. Friends, we are aware that as per Rule 86A, an officer can block the credit which for the various reasons. Reasons are like ITC has been taken without receipt of goods, invoice has been issued by fraudulent person, supplier has not discharged the tax, so and so forth. So practically what is happening is that at ground level, the officers himself block the credit without any giving any opportunity to the taxpayer. So we have to manually go to the department, ask for the reason, and sometimes the reasons are not even communicated to us. They simply said that they got an instruction from the higher level that this credit has to be blocked, but there is no clarity why this credit has to be blocked, what is the reason. And this has resulted into many taxpayers filing writ against the constitutional validity of Rule 86A. And one of the most important grounds for challenging the validity is the violation of principle of natural justice. There is no show cause notice like in 73, 74, which is given to the taxpayer. They simply block the credit. I don't have an opportunity to present myself, and hence it's clearly leading to violation of principle of natural justice and arbitrary use of powers by the officer. So what the taxpayer should approach? The approach of the taxpayer should be first, in case of blocking of tax credit, they should visit the officer. They should submit a letter stating that we have availed all our credit legally and submit a 2A3B RICO. Even otherwise, after submission of all your relevant documents, etc., the officer is not listening to you, not unblocking the credit, the only alternative remedy which is left with us is to file a writ before High Court. So we will wait in 2021 to see how this Rule 86 will be interpreted by High Court. No doubt, in case of fraudulent transaction, etc., even the Gujarat High Court in case of SS Industries recently, last month, has said that Rule 86A can be invoked where the department has a prima facie opinion that credit has been fraudulently obtained. But we have to have distinction between a fraudulent taxpayer and a genuine taxpayer. For genuine taxpayer, there is a violation of natural justice, and hence Rule 86 say the way it is formed is not acceptable because there is no opportunity given to the taxpayer. Moving on, next set of writs which have been filed in 2020 is related to the condition imposed under Section 16(2)(c). 16(2)(c) say that subject to the provision of Section 41, the tax charge in respect of supply has been actually paid. So this specifically says that my supplier should have paid the tax. But when we read this section, it's the section itself says it is subject to the provision of Section 41, and 41 deals with my matching principles, filing of GSTR 1, 2, 3, and it talks about giving of mismatch report in MIS 1. So since this condition is subject to Section 41, and entire Section 41 is abeyance because there is no 1, 2, 3, GSTR 1, 2, 3. Everything has been kept in abeyance. So to my mind, this condition itself should be kept in abeyance till the time Section 41 is implemented. On the very similar grounds, the writs have been admitted in Delhi High Court and Calcutta High Court. Apart from that, there are various past jurisprudence under VAT. We have Gerulal Balchand judgments, so and so forth of Delhi High Court, etc., wherein the general principles which have been laid down under VAT is that if you are a genuine taxpayer, then these conditions are ultra virus. However, if you have collated with your supplier and fraudulently availed the credit, then this condition will be applicable to you. So similarly, in our case also, if we are a genuine taxpayer, we have satisfied all the conditions, then credit should be available to us at least for the initial period of 17, 18, and 18, 19, where there was no patching concept ever available. So we will wait and see how in 2021, ultimately the Delhi High Court and Calcutta High Court will hold in respect of Section 16(2)(6). Similarly, writs have been filed for Rule 36(4) on the very similar grounds that they don't have the power to restrict the credit to 20%, 10%, or 5% as per the recent amendment. And the major ground is that this Rule 36(4) was introduced along with Section 43A, and Section 43A was a complete new written process talking about Annexure 1, Annexure 2, etc. And friends, please mind, Section 43 has not been notified till now. So Section 43 has not been notified. However, Rule 36(4) has been implemented. Again, ultra virus. Second, there is no restriction under Section 16 that invoices has to be uploaded in GSTR 1, which is imposed as per Rule 36(4). And this amendment was proposed in Section 16 as per 39 GST Council meeting, but was never implemented. So in fact, it will be very interesting to see how the court in 2021 will uphold, will interpret Rule 36 for constitutional validity. The next set of judgment was regarding the block credits, safari retreats, wherein the Odisha High Court said that if you are engaged in leasing businesses, if you are building a property and leasing it out, then the credit on construction should be available. Section 17(5)(d) has to be read down. And the appeal against this Odisha High Court has been filed. SLP has been filed before Supreme Court, and the same is pending without any stay. And we have similar kinds of writs which have been filed before other high courts. So there is a favorable judgment of Odisha High Court. I have serious observations about the conclusion of this High Court judgment. Practically, in our view, the way law is worded, it will be very difficult to get the credit. And in fact, no other High Court has relied upon Odisha High Court. No other High Court has relied upon Odisha High Court and giving any favorable judgment. So we will ultimately have to wait for Supreme Court judgment to see how this section is interpreted. In the meanwhile, we will suggest that in case you are engaged in renting businesses, better take the credit and reverse it simultaneously. So in the very same month, take credit, reverse it, so that if you have any favorable judgment in future, you can reclaim the credit at future point of time. The next set of credit is with judgment is with respect to budgetary support. Friends, we are aware that prior to GST, there were various kinds of area-based exemption schemes, incentives which were available. So after implementation of GST, all these schemes were vanished. The GST Council specifically discontinued all these schemes, and it was at the liberty of the state or center to notify such scheme. So center came out with a budgetary support scheme in GST regime for units located in Uttarakhand, JNK, HP, etc. And there they said that I will pay you 58% of CGST paid by cash as refund. So the scheme was that whatever CGST you are paying, I will reimburse you 58%. The reason is whatever CGST the center is collecting, 42% goes to the state and 58% comes to center. And they said that since I'm getting 58% only, I will reimburse you 58%. The SSC in the case of Hero Motorcorp went to Delhi High Court and challenged this validity of budgetary support scheme. They said that even in pre-GST regime, when they granted 100% excise exemption, at that time also 42% excise used to go to state and 58% excise used to come to me. There you never had any problem, and now you are only giving me a refund of 58%. I had set up this factory basis your promise that you will give me 100% exemption, and hence there is a violation of promissory estoppel. However, the High Court, relying upon Section 174 of repeal, they specifically said that Section 174 specifically says that any exemption in respect of incentive schemes shall not be continued as privilege in GST regime. So there is a specific section, they said that these incentive schemes, etc., will not be continued as privilege, and accordingly, they held against the taxpayer. However, we have certain favorable judgment also. Bombay High Court in case of M refineries, it's a favorable judgment in case of sales tax matter where promissory estoppel principle have been followed. And other judgments in the case of adlabs, entertainment, etc. is pending before court. So in case of area-based exemptions, we have favorable judgment. We have judgment against taxpayers. So it will be interesting to see how Supreme Court will ultimately held in these cases. Next is payment of GST in installments. Friends, we are aware that in GST regime in 2020, because of COVID, etc., many taxpayers are facing cash crunch and they are not able to deposit the GST on time because of genuine cash problem, say tour and travel industry, hospitality industry facing genuine problem, etc. Recently, the Kerala High Court in case of Malayalam Motors specifically allowed the taxpayer payment of tax in installment under section 680 and directed the department to accept the belated returns by the petitioner. So in case we have a client who is having a genuine problem where he is not in a position to actually discharge the tax liability, etc., in my view, you can always write a letter to your jurisdictional concerned officer, demand payment of installments under section 80, can rely upon this Kerala High Court judgment, and there is a reasonable chance that they will allow you payment of tax in installment. Otherwise, we may have to approach High Court as the way taxpayer approach in this case. Now I will ask Hanish to continue with the remaining judgments.
Thanks a lot, Tushar. I will share my screen. Is my screen visible?
Yes.
Right. So thanks a lot, Tushar, for interesting insight on various judgments. Now I'll take the session on 5 other important judgments which both of us thought are important for this session. The first one is on RCM liability on ocean freight in case of CIF imports. Okay, so there are two kinds of imports which are possible through ocean, that is through sea. It is a CIF import and a FOB import. Now there is a CIF import where I get an all-inclusive price consignment, and as FOB where the exporter from his country is going to ship the goods on my behalf and I will be required to pay the money to the transporter. So both these issues or the shipper, both these issues were before the Gujarat High Court in case of Mohit Mundel's case as to whether on FOB and on CIF consignments am I required to pay taxes under reverse charge mechanism or not. The reason why this issue came up is because the most important ground here was that when I import the goods, I'm required to pay customs duty, and the value of customs duty is always on the CIF pricing. So even if I have a FOB value of goods which I'm importing, I have to add freight to it, I have to add insurance to it, and only on that value, which is referred to as the assessable value, I'm required to pay the customs duty. So the issue here was, does it lead to double taxation on the same aspect, so that I am paying customs duty also, and now I'm required to pay GST also on the same value of freight. Okay, so before we get into what the court held, let's get into some background of the law. Now, all the provisions which I've mentioned here are all IGST provisions because we are talking about an interstate transaction. If you look at section 5 subsection 3, it gives powers to the central government to notify transactions where the recipient is required to pay taxes. If you look at the definition of who a recipient is, recipient refers to a person who pays consideration. So if A sells goods to B and B pays money to A, because B has paid consideration for the supply, B becomes the recipient. Okay, so I would like to highlight here again, 5.3 allows government to notify a person who is a recipient to pay taxes under reverse charge mechanism. Now, if you look at the right hand side of the screen, you will observe serial number 10 of the RCM notification, which says supplier is a person outside India and recipient being the importer, that is the person who files bill of entry, will be required to pay tax under reverse charge mechanism. In a CIF transaction, we will be aware that the exporter, who is a person outside India, is paying money to the shipper, and it is not the importer who is paying the taxes. But here, the person who is made liable is an importer and not the person who is paying consideration. So that was another argument. Okay, so a writ petition was filed, and in Mohit Minerals case, the Gujarat High Court, based on various arguments, one being it leading to double taxation, but that they did not go into too much of detail around it. But they also said that the powers are for notifying a recipient of person and recipient of person to be recipient of supply to be liable to tax. But in a CIF transaction, the importer is not the recipient, so he will not be required to pay taxes under reverse charge mechanism. Second, the entire transaction is happening outside India, okay, and the payment is being made by a person outside India, so this cannot be made liable to tax in India, okay. And third, of course, that double taxation, which not too much of detail, but that reliance was placed on that argument also, okay. Basis this, the entire RCM serial number 10 has been held unconstitutional. If you look at the judgment very closely, the arguments were both for FOB as well as CIF, but the judgment has been given only on CIF, but not much has been said about FOB. Though nothing has been said about FOB, and it would mean that the importer who is paying to the shipper in a FOB transaction, he will have to pay taxes under reverse charge mechanism, and all these grounds which you have mentioned here will not hold good, right? But the point is, if the serial number 10 itself is held unconstitutional, then how can taxes be collected under this serial number from the date when this from the date when from when this judgment has been issued, or it holds it unconstitutional? So it is unconstitutional from the beginning itself and not from the day the judgment is rendered. Okay, so now what are the issues which arise because of this? One is the distinction between CIF and FOB. I think because serial number 10 has been held unconstitutional, there is no requirement to pay taxes at all. But definitely, if you look at the 39 GST Council meeting where they said we are deferring the discussion relating to this, judgment, and looking at the trend, SLP is definitely going to be filed before the Supreme Court on this matter. The issue now is, if for the past period I have already paid IGST, then what happens to that ocean freight? The GST paid on that ocean freight? That is one important question. I would believe, based on a lot of excise and service tax judgments, that once the tax has already been admitted by the department authorities, they cannot deny the credit as far as the credit is concerned. So wherever you have paid the tax and you have claimed the credit, there can be no questions attached to that. But can you file a refund claim for whatever you have paid? Because assuming you are not entitled to claim the credit because these wasn't related to exempt products, then can you claim the credit? Can you claim the refund? Now, again, here we have mixed judgments. One issue will be the time barring 2 years criteria. So I will have to claim the refund within 2 years from the date of payment of tax. If the 2 years is there with you, then please file a refund claim based on this judgment, because the serial number 10 itself is unconstitutional. Okay, but if the 2 years is not there, one general argument always available is that under the constitution, what can be collected as tax is by authority of law, and anything which does not have the authority of law, you cannot collect taxes there. So by that argument, whatever I have paid is not a tax but only a deposit, and so you should give it back to me. But there are mixed judgments here. There are some favoring the assessee and some against the assessee. So that might be a little, we don't know the outcome of that case. So a conscious risk you would want to take in case the period is beyond 2 years. Okay. The second judgment is on inverted duty structure. Now, what do you mean by an inverted duty structure? Inverted duty structure is a scenario where the rate of tax on your input is greater than the rate of tax on your output. We can take some simple examples. In case of agarbatti manufacturing, the most important input is or the raw material is the chemical compound, okay, which is liable to tax at the rate of 18%. But agarbatti, which is a final product, is liable to tax at the rate of 5%. So I am paying on my input 18%, and on my output I am required to discharge only 5%. I will have accumulation of credit. Section 54 says that you will be entitled to claim refund of this differential credit. But the issue here is now, can I claim refund of everything, that is input services and capital goods? Because I can take refund on I can take credit of three aspects. One is input, that is raw materials, input services, these are services, and capital goods like machinery. So here the formula was amended. I would just want to highlight the right hand side of the screen here. If you look at the rule 89 earlier, one second. So earlier, that is on 1st July 2017, if you look at the rule, it said the refund which will be allowed will be net ITC divided by the total turnover multiplied by the inverted duty turnover minus the tax payable on inverted rate of supply of goods. So the important word here is net ITC. Okay, and the net ITC meant input and input services, capital goods were kept outside. Okay, even for export, capital goods are kept outside. Even for inverted duty structure, capital goods were kept outside. In June 2018, this formula was retrospectively amended to say that always the section meant that you will get refund only on inputs. If you look at the left hand side now, here you will observe it says where the credit has been accumulated on account of rate of tax on inputs. So the justification for this retrospective amendment was that always the intention was to give you refund only on input, not on input services. And so they are retrospectively amending the formula to say net ITC will mean only input and not input services. So now in an agarbatti manufacturing company, if they spend a lot of money for advertising, or spend a lot of money for logistics, and it leads to accumulation of credit, and because these services are liable to tax at 18%, you can claim the credit, but you will not be able to claim refund or encash this credit, was the objective here. Okay. So now we have two contradictory judgments. First, we had Gujarat High Court judgment, which said that you should take into account the context in which the word input has been used. The way in which, or the company it keeps, the inputs here means inputs for the purpose of outward supply. Input service is also input for the purpose of outward supply. And so there should be no restriction on giving refund even on input services, even after the formula has been amended. Okay. And then we have a Madras High Court judgment which says that the word used is input. The formula is consistent with section 54, and hence you will have the refund will be restricted only to inputs and not input services. Okay. Now, based on Gujarat High Court judgment, now ignoring Madras High Court judgment for the time being, okay, if we have to take input in the way the entire section is structured and the objective of the structure, then what restricts the government from giving refund even on capital goods? Because these capital goods are also in some way input for outward supply, and without these machineries I will not be able to manufacture the goods. So there should be no restriction. Section 54, if inputs has to be read as including input services, so then capital goods also should be included. Okay. Again, Gujarat High Court, the assessee might go to Supreme Court, and the department might go to the Supreme Court, and Madras High Court, the assessee might have to go to might go to Supreme Court, and that's when we'll get the final judgment. Then what do we have to do now? I would believe, or we would believe, that please claim refund including input services. And if there is a lot of accumulation of credit, because of which even on capital goods the credit is only getting accumulated, please claim the refund even there. As of today, it might get rejected. As of today in Gujarat, this is binding judgment. In Madras High Court, the Madras High Court judgment is binding. But other states other than Gujarat and Madras High Court, other than Gujarat and Tamil Nadu, please claim refund on input services and capital goods. The refund will get rejected. And when a favorable judgment comes in Supreme Court, keep matter alive by keep filing the appeals. Okay, keep the matter alive. And if a favorable judgment comes, or when a favorable judgment comes from Supreme Court, please encash that. Because if you don't file the refund for input services and capital goods now, and after 5 years the judgment comes, already we are the refund claim for input service and capital goods will get time barred, because you can claim the refund only within 2 years time, right? Then third, rectification of returns. Now, all of us have been used to rectification of returns, be it income tax, be it VAT, be it service tax. Only excise also did not have a provision for rectification of returns. So we would file a letter with the department that these are the invoices missed, and input credit will claim it in the next month. Okay. But in GST, there was no concept of rectification of returns. And there was a circular which was issued, which says if you want to rectify anything, okay, we will allow you to rectify it in the same month itself. Okay, that was the proposal. In fact, even in the new scheme of returns, which did not see the light of the day, GSTR 1, 2, and the Sahaj, Sugam, and the other returns which they were planning to implement, even there they were giving an option to amend the returns. Okay, but currently there is no rectification of returns or revision of returns which is possible. Okay, so we have Bharti Airtel. Okay, what they did is they did not claim a lot of credit, and then a credit of 900 crores approximately got accumulated, which they realized only when GSTR 2A was made available. So GSTR 2A, which is a statement which consolidates all the credits based on the GSTR 1 filed by the vendors and displays it to us in one statement. That statement, that access was available only at a later point in time. So they realized that they have not claimed credit of approximately 900 crores and they have discharged this liability by cash, right? So they approached the Delhi High Court and said that, look, the circular says I will have to rectify in the same month. But where is the mechanism in which I can rectify in the same month? Also, the functionalities which were required to be made available in the form of GSTR 2 and GSTR 3 and GSTR 2 and GSTR 1A, which would have helped me amend or rectify the mistakes which I have made, are all not functional. And because of the mistake of the department in not making this or the government in not making these facilities available, I should not be penalized. Okay, so here the Delhi High Court accepted the view of Bharti Airtel, and they said that there have to be a provision which has to be given. And now that there is no provision and all these taxes have been discharged by cash, the excess credit which is available with them, which is not being claimed in the return, they are required to, the department is required to give them a refund. A very strange judgment, I would believe, but still the department was required to give a refund of 900 crores. Now the matter went to Supreme Court, and Supreme Court as of now have given stay against the operation of this matter. So for the time being, this matter has been stayed. Now similarly in Madras High Court we had Sunday Chemicals. Again here what had happened is the assessee, while uploading his returns, he uploaded a intrastate supply as an interstate supply. He paid all the taxes, but instead of mentioning it as CGST, SGST, has mentioned as IGST. This was highlighted to him by his customer, saying, in my 2A, the supply which you have made as intrastate is appearing as interstate, and I will not be allowed to take the credit, or I will be denied the credit. So please rectify it. But this was highlighted to him only in March 2019, by when the due date for rectification had already passed. So now the assessee or the taxpayer approached the Madras High Court and said that, look, this is the difference, but there can be no intention on my part to do something fraudulent. It is a genuine human error. Okay, and there is no provision to correct this. And I would have corrected it earlier if 1A or 2A was made available, where either my recipient would have amended it, or if he amended, I would have accepted the amendment and the amendment would have taken place. Now that all those systems are not in place, I cannot be put in a wrong position where my vendor, my customer cannot claim the credit merely because of a human error. Okay, so the Madras High Court agreed and said that they have, the assessee will be required to be given an opportunity to rectify, and in this case the CGST SGST already paid will be treated as a IGST transaction, though not in as many number of words, but this is what was held in this judgment. Okay, the third important issue is with respect to intermediary. Now a little bit background around this. If you go
Hanish,
to,
sorry to disturb. Let's close in another 2-3 minutes.
okay, sure. I'm sorry, these are all very interesting judgments. I also got carried away. Sorry, Tushar. I'll just quickly run through intermediary services. Now, The important point here in case of intermediary services was, if you look at definition of export of services, okay, one of the primary condition for export of services is place of supply should be outside India, okay. And if you look at the IGST Act, in case of intermediary, they have said that in case of intermediary services, the place of supply will be the place where the service provider is located, which of course, in case I am exporting certain services from India to USA, and I being an intermediary, my location will become the place of supply, which is India. So I don't satisfy the condition of export. So a writ petition was filed saying, how can a transaction which otherwise satisfies all the conditions of export be made liable to tax under GST? Now, unfortunately, in case of Material Recycling Association of India, Gujarat High Court held that this intermediary services can be made liable to tax. It is valid. And very interesting, the question was never before them on whether it should be liable to tax as CGST, SGST, or IGST, but invariably or indirectly, both the Department Council and the Assessees Council, as well as the court, has observed or approved that intermediary services will be liable to tax as CGST, SGST, and not IGST, because that also has been a big debate in trade circles. Okay. Now, fourth case, very quickly I'll cover this. Okay. One important, okay, so I'll cover only the important aspect here. Now, detention of goods on undervaluation. Now, there might be goods worth 1 lakh, but I want to sell it to my customer at 10,000 rupees. Can that be a ground of, detention of goods under section 129? Courts have clearly said that the inspecting authorities at the check post, their job is only to check whether e-way bill is there, invoice is there, or delivery challan is there or not, and whether it is matching with the description of the goods being transported. Now, assessee can decide whether he wants to sell at 10,000 or 20,000 or 50,000. It is not the job of the check post officers to do the assessment. Okay, so the detention is invalid. Likewise, misclassification of goods. The goods were liable to be classified in 2100, but it's been classified as 2106. The check post officers cannot decide that the classification is not this but that. Okay, so that is one interesting issue which came up in relation to e-way bill. One issue I want to highlight before I leave. In Shamir Chinganam Poil, this was, I think, a Kerala matter. Okay, so here what had happened, e-way bill was there, and the truck driver was carrying the invoice electronically and not physically. Unfortunately, the Kerala High Court has mentioned that the e-way bill can be carried electronically, but the invoice cannot be carried electronically. Okay, if you look at the Information Technology Act, it says any document which has to be presented physically can be presented electronically and it will still be treated as a valid document. Maybe this argument was not brought before the Kerala High Court, but it's a notwithstanding, which means it overrides all the other acts. So anything which I'm required to do manual can be done electronically. If this argument would have been brought before the Kerala High Court, the scene would have been a little different. Right. So with this, there are a lot of other judgments. We'll share this PPT with you, and I'm sure you will find all these judgments very useful. Thank you very much for giving me this opportunity, and Tushar, this opportunity to share our thoughts on few judgments. Thanks a lot.